Hey everyone, welcome back to my channel. Happy Monday. I hope you had a great Father's Day. To all of the fathers out there, even the dog dads, I always include them. But I hope you had a great weekend, and I am back today with another Monday market update on what's going on in the Phoenix real estate market. If you're new to my channel, welcome. Hit the subscribe button and the bell for notifications. I'm here every Monday giving an update on what's going on in our market, and I also post other videos throughout the week about Phoenix real estate and just living in Phoenix in general. So let's jump into it today. I've got a lot to share. We had a big week last week with the Fed meeting and the reaction to that, and a lot to talk about with what's going on here in Phoenix too, specifically because day by day our real estate market is changing, and it's been pretty interesting to keep up with it and try to stay on top of what's going on. So a lot of the information that I'm going to share today is from the Cromford report. I am a subscriber, and they provide excellent information to their real estate subscribers that they can then share with their clients. So I'm here doing that for you today. So let's get started. As I've always been talking about lately, let's look at kind of the broader picture, and then we'll start talking more specifically about Phoenix. And interest rates are a very interesting, no pun intended, topic right now. And that was a bad joke. That didn't even make sense. So let's talk about interest rates. So I have this headline here: could mortgage rates fall? Agents react to biggest rate hike in 28 years. So on Wednesday, the Federal Reserve raised the Fed funds rate by 75 basis points. And that is a huge increase. That is the highest we've seen since 1994. And they've hiked the federal funds rate 3 times since March for a total of 150 basis points. Now, it's important to remember that this is not the mortgage interest rate. This is the federal funds rate, which has to do with short-term rates. So it doesn't affect the mortgage interest rate directly. You're not going to see a hike of 75 basis points in your interest rate. However, it does affect it in the long run. So what is happening right now is, of course, our inflation is really high. Last week, the CPI report came out, and inflation is still higher and went higher than we expected. And so the Federal Reserve is taking very aggressive action to increase the borrowing rate so that we can stop inflation. And so inflation is the enemy of mortgage rates. And as that continues to go higher, so do mortgage rates. And so in the long run, it is affected by what's going on in the broader economy, of course, and we will more than likely continue to see mortgage interest rates increase. And so I have a little article here where the executive vice president of Guaranteed Rate was actually optimistic about the hike. And what's interesting is on Wednesday, when the Fed made their announcement, the mortgage interest rates actually went down. And that was because the markets were reacting positively to the Fed taking control of inflation. However, by the end of the week, rates went back up. So I'm a realtor, not a mortgage broker, and this isn't something that I am extremely well versed on, but it's certainly something that I try to pay attention to and relay to all of you. So, forgive me for not having all of the nitty-gritty detail, but really just trying to kind of do my best to convey what's going on in the market in a broad sense. And so by the end of the week, the average 30-year fixed rate mortgage spiked by 55 basis points from 5.23 to 5.78 at the end of last week, according to Freddie Mac. So at the end of the week, it wasn't really the best news for mortgage interest rates. But what's interesting is that this executive VP for Guaranteed Rate is saying that the Fed's action today created confidence in the market, and we saw rates improve. He personally believes that we've seen the worst of the rate increases, and he said, I could be wrong, but I don't see rates going up to 8 or 9%. I think we'll have 5 or 6s all year. So we can only hope he's right, but it's near impossible to predict what's going to happen right now. So let's talk about some other factors too. Lumber, for the first time in a long time, we can talk about lumber prices actually going down. They went down 12% last month, and that's like incredible to say. It's been like 2 years. We haven't been able to really report any good news with lumber prices. Year over year, they're actually down 47%. And they hit a peak in 2021. We're down 65% from that peak. And just so you know what that was, it was 1733 per thousand board feet. Okay, excuse my terrible writing there. But that was our peak in 2021. So we're down 65% from that, which is really exciting. That certainly affects the real estate market, knowing that lumber prices are coming down. But now is not quite the time for that because our demand is so darn low. So let's talk about what's going on there. This chart here, and I'm actually going to erase this little doodle so it's out of the way here. This chart that we have here is the average list price per square foot for the Phoenix metro area. And what we're seeing is this number coming down in a few different sections. That blue line is our active list prices per square foot, so active listings, which is essentially what I have over here, the asking prices. So asking prices are down, and that is down, that peaked in April. So you can see where that peaked right around here. And that was at 364 average list price per square foot, or average price per square foot. And it peaked back in April, and now we're sitting at about, went down to 353 price per square foot on those asking prices. And then we're seeing the same thing with the under contract prices, which makes sense, right? Because if your asking price is lower, likely your under contract price is going to be lower as well by the time you get a contract. So under contract prices, those peaked in May, so just a month behind the asking prices, at 314, and now we're down to 311. And so you can see the green line is the under contract. You can see as that started to kind of taper very slightly, but you can see that. And then obviously in these numbers here, we see that that has certainly started to go down. Now our closed prices here have just kind of moved sideways. And all of that really makes sense, right? Because we're seeing asking prices change first, then under contract, and then eventually you'll see those closing prices because those are about 30 to 60 days behind once you get under contract because it takes that long to close. So our closing prices haven't changed all that much. We're around 305 a square foot or price per square foot. And that is this here. And I think it was about 2 weeks ago, I showed this chart and was saying how the brown line and the red line are going to likely switch. We're starting to see that gap between the two really close in. And it seems to be where we're headed. So why is all of this happening? Well, because we have a lot of listings on the market and our demand is going down. So I'm going to show you demand in a second, but let's talk about the active listings first. So you can see here quite dramatically what's been going on with our active listings in the market, which has been awesome because for the longest time, we've not had enough homes on the market, and now we are starting to see choices for buyers. But the problem is no buyers want to buy right now as the interest rates continue to go up. So we're just starting to see a surplus of listings. And a surplus is not the right word because we're still undersupplied for what a normal market should be compared to our demand, but we're starting to see major gains in the amount of listings on the market. We've doubled since March, which is very hard to believe. And so the question is, who the heck are all of these sellers, right? And it's really hard to know for sure, but the Cromford report is making some assumptions on who these folks are that are selling. First, more than likely, it's people with multiple homes. So, more wealthy people that have a second home here, or maybe a couple homes here, maybe it's an investment and a second home, and they're thinking, well, we may have reached the peak, so I'm going to offload the home that I don't need anymore, or, I want to cash in because of whatever reason with all these changes in the market, and I'm going to sell off my second home. Another thought is landlords that have multiple properties. And they are probably kind of thinking the same thing. The market's changing. I want to cash out as I feel that we're maybe at the peak, close to the peak, which they did miss it. That was March, it seems like. And starting to list their homes or their extra investment properties because maybe they don't perform as well as some others in their portfolio, and they figure we'll just get rid of these, cash out, and see where things go. The third is the short-term rentals. And there were, and I can tell you from experience, so many buyers in the last 2 years purchasing for the purpose of an Airbnb property or a short-term rental because you could make a ton of money on that, especially at the beginning or kind of middle of 2020, end of 2020, when interest rates were really low and prices were going up, but it wasn't to where it is now. You could really cash flow a lot if you made the right purchase. And I think there were a lot of folks out there that were more than likely amateur Airbnb operators and perhaps are thinking with a recession, now is not the time to hold something like this and maybe wanting to cash out. So those are the three places we can assume these listings are coming from. And the big thing to remember is these people who are selling are not buying a new home, at least not in the Phoenix market. If they were, we wouldn't see such an increase in active listings. So clearly this is a one-sided transaction where they're selling and moving on to whether they're renting, exiting Phoenix if it's their primary residence, or offloading an additional property, or just exiting the market altogether. So really hard to know. One thing that's interesting is our new home listings. So homes that were built in 2021 or later are up. We have about 13% of active listings in our market right now are built in 2021 or later. So they're relatively new construction. And if we look back to March, that number was about 11.6% of our market was new homes. So this has increased too, which is interesting because again, for the longest time, we've had, supply shortages, labor shortages, lumber prices, all of these things affecting new home construction and just this influx of demand, and builders couldn't keep up. And now all of a sudden we're starting to see this number go up. That's a first. And so we'll definitely want to watch the new home listings because that's also a reflection of what our demand is doing. Now let's talk about demand. This graph does not look so pretty. We are in 2022. This is the greenish yellow line, whatever you want to call it. And clearly on a downward trend here. So our listings under contract is in effect our demand, really. And you can see that this number has finally gone below the third week in June as far as number of listings under contract, which is very unheard of for June. We are very, very low for a typical demand in June. And if you look back in history, the scary thing is that the only other time we had this low of demand in June was, yep, you guessed it, 2008. So this is a little bit of a frightening indicator, especially with our supply increasing so much. This blue line here is 2021. So you can see, we do taper off a bit in the summer typically, and then rally a little bit in the fourth quarter, and then kind of go down for the rest of the year. That's kind of our seasonal demand. But this is certainly, a much lower trajectory than what we typically see in the summer. So that is a good visual of what's going on with our demand. And next I'm going to talk about the Cromford Market Index, which also shows that, but it's also going to show us supply as well. And if you're new here, the CMI is an index that the Cromford report has created, tells us supply and demand factors in our market, and tells us where our prices are heading, whether it's going to be appreciation or depreciation. I guess we can talk about that too, and as well as, if we're in a buyer's market or seller's market. So if that index is over 110, we're in a seller's market, and you can expect values to continue to appreciate. And if we're under 90, that is a buyer's market, and we can see depreciation or just a deceleration in appreciation. So here we go. I got everything on the same page for you guys today. We've got every city with their CMI over here. This is just a visual of the CMI since the beginning of the year, so you can see where we're headed there. And then I've got our dials down here that I'll talk about. But I want to first start with this here. I've got June and July. The reason I have these months there is if you look down here, the ones that I have circled, Maricopa, Queen Creek, and Buckeye. So Buckeye's CMI is down to 131. Now, if you remember, anything above 110 is the seller's market, but last month it was at 182, so it's continued to go down like everything else. But it is getting very close to being in a balanced market, and the Cromford report is saying that Buckeye could be in balance by June. By the end of June, because it's already June 19th, 20th. So, give it a couple more weeks. We might see a balanced market in Buckeye. Very interesting. And then we've got Queen Creek here for July and Maricopa. So that is what the Cromford report is saying with all of these CMIs here. They're at a point where as things continue, if we don't see any change in the market, those three cities will probably be in balance by June and July. Now again, here is the overall CMI. It's not a pretty picture. It's clearly gone down quite a bit. And then we've got our dials here. So we're sitting at 216.1. If you're new here, this number was in the 400s back in March, and this is what happened. But that number has changed so much. Our demand's gone down again. We're at 91.7. So technically, anywhere between 90 to 110 is considered normal, but we're getting out of the normal range for demand. That continues to fall. By next week, when I come on here, we might be outside of the normal range for demand. So that's something to keep an eye on. And then our supply, we're sitting at 42.4. So again, if 100 or that range in there is balanced, we are about 58% below normal for supply. So we still don't have an oversupply. We still don't have, what we normally should have on the market. But the thing that we need to watch is that as our demand continues to go down and our supply continues to go up, we're getting closer to balance. And if those two cross, then we will certainly be in a buyer's market where we have an oversupply and no demand for that supply. And that's when home values and prices will decrease. So the two rely on each other as far as where we end up in this market. And so far as they're going in opposite directions as fast as they are, we could see them come together and balance, or we could see them cross and we go into a whole new market. A lot's going on. In summary, we just continue to see this additional supply of homes coming on the market. We continue to see our demand go down as we see interest rates go up. And so I don't think that there is an end in sight in interest rate increases. I think this is probably going to continue for the rest of the year. And we'll see if buyers decide to work with those rates or continue to wait it out, and how many sellers continue to put their homes on the market for whatever reason that they feel is pertinent, because our supply continues to increase. So if you have been thinking about selling your house, especially with all these changes in the market, check the description below. I have a link where you can get an instant home valuation, and that might help you understand the value of the home. I can also give you a CMA or find a time to meet with you and talk about your home. And if you're looking to buy, I've got a link to my MLS in the description below, so check that out so you can do some home searching there. I'm happy to help you as a buyer or seller, so feel free to reach out to me anytime by call, text, or email. My info is in the description. So thanks guys for joining me. Again, I hope you had a great Father's Day. I hope you have a wonderful week, and I will be back here on Friday. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.